everyone to today's market report, the 29th of November 2024. Right, today I'd like to talk about the New Zealand dollar outlook. Now, first of all, let's touch base on with regards to the recent developments in monetary policy. Now, the Reserve Bank of New Zealand, or in short RBNZ, announced a 50 basis point reduction in the official cash rate, bringing it to 4.25% in line with market expectations. Looking ahead, the RBNZ has signaled further rate cuts early next year. Now, this intent was emphasized during an interview with Reuters, where RBNZ Assistant Governor Karen Silk stated a rate cut of either 25 basis points or 50 basis points will be on the table for February. Now, I said this is a conviction, okay? So, will be on the table for February. Now, this front-loaded approach to monetary easing underscores the RBNZ's dovish stance, reflecting subdued economic activity and stable inflation expectations within the 1 to 3% target range, right? So projections for the OCR, the official cash rate, reveal a continued downward trajectory, with estimates placing the rate at 4.07% by March 2025 and 3.55% by December 2025. So these adjustments highlight the RBNZ's proactive efforts to stimulate the domestic economy, right? So this is the recent developments. What about the external global risks that New Zealand is facing, right? We need to look into that as well before we can understand, how looking in the New Zealand dollar, what to expect next versus the rest of the currencies in the world, especially the US dollar. Now, first of all, the New Zealand's heavy trade reliance on China exposes the New Zealand dollar to heightened external vulnerabilities, particularly due to the U.S. China trade tensions. Now, impact of U.S. China trade relations, President-elect Donald Trump announced an additional 10% tariffs on Chinese goods, compounding existing levies. Now, given China's role as a major trading partner, such measures heighten the risk of trade spillovers, adversely impacting the New Zealand dollar, which often serves as a proxy for China-related risks. Now, this is the same applied to the Aussie dollar as well. Now, on top of that, the U.S. Federal Reserve outlook, in contrast, Fed Chair Jerome Powell reaffirmed that the U.S. economy is resilient, stating that there are no immediate signals necessitating rate cuts. This Fed's cautious monetary stance, alongside robust U.S. economic data, underpins the U.S. dollar strength. So, the divergence between the RBNZ's accommodative policy and the Fed's stable approach widens the interest rate differential between the New Zealand dollar and the US, further exerting pressure on the New Zealand versus the US dollar pairing, right? So if this don't change, we would certainly see more weakness. But January 20th, that will be the deciding point, when the President-elect Donald Trump now finally becomes the president once again. So we have to wait until that day, but nevertheless, whatever Trump is saying does carry word, does carry so the movements at the current moment. Okay, so at the end of the day, let's move on to the conclusion and the outlook as well. Now, a bearish bias for New Zealand is likely to persist as long as the RBNZ continues its dovish trajectory with further rate cuts. Global risks such as U.S. China trade tensions and U.S. dollar strength remain influential, right? So key areas to monitor include the February's RBNZ policy decision. By this time, Trump would have been the president. So we will see if he continues to say that, yes, I am going to continue with all these trade wars. Yeah, there's a possibility inflation might reignite for the time being, and the Fed might not cut rates as fast as they would like to. Okay, but nevertheless, let's wait until the December FOMC meeting, and then we shall see if the Fed's real move, because at this moment, last I looked at it, it was still a 50-50 thing, down from a higher percentage of 69% that we will probably see a cut. Now it's down to 50-50. So let's see this Fed stance continue or not. Okay, so if they continue and said they are not going to cut that much while awaiting more real data with regards to inflation, and the RBNZ policy decision continues to be rate cutting, we will know that this definitely there's more weakness to the New Zealand versus the US dollar. Okay, so external factors, especially developments in US China trade relations and US Federal Reserve policy, which directly influence the New Zealand dollar pair, this is something that we need to look into detail. So as long as things stay status quo, like what I mentioned just now, okay, there's risk of US China trade relations souring further, and then what we can do whenever there is a correction in the New Zealand dollar, look for shorting, because fundamental is supporting that. As long as there is no strong buying from established support areas in the New Zealand dollar, any movement up, if it sees messy, that is known as a consolidation or a corrective pattern. Look for areas to continue shorting it. That will be the play going forward until there are changes to the fundamentals. Okay, so with that, that's the report for today.